What happens when you sit down with Arthur Hayes in the back of a Maybach and dive into the future of Bitcoin, the US trade war, and the Fed? You get this, a raw, unfiltered conversation with one of the sharpest minds in crypto and one of the boldest voices in global macro. Arthur approaches the market like a strategist with clarity, conviction, and zero hesitation. He built BitMEX, invented the perpetual futures contract, and he now runs Maelstrom, one of the most respected crypto investment funds in the game. But what really sets Arthur apart is his ability to zoom out and call the play before it happens. So when we asked him where the world is heading, he opened with this.
People are living in Hopium. They think, oh, it's not going to be so bad. There's not really going to be a divorce between China and the US. And I think, that's Hopium. There will be a bifurcation of the world into a US camp and a Chinese camp. Structurally, this is going to happen. The American empire cannot handle volatility, nor can any other country around the world. Bitcoin thrives in that situation, so we don't need to be worried.
That's the kind of clarity Arthur brings. He's not here to sugarcoat it. He's here to show you where it's all going. And when we asked him where Bitcoin fits into this global mess,
we know how Bitcoin responds to this. We now have an ETF. We now have this narrative in an institutional investor's mind. Oh, Bitcoin is not just NASDAQ high beta. It's actually a hedge against the fall of American exceptionalism, the fall of the American hegemonic empire.
But this wasn't all theory. We also talked about timing, the exact moment he knew the bottom was in.
That is going to be the bottom moment of this particular cycle when Besson got on Bloomberg and gave that interview saying he's got buybacks and he's going to make sure that the treasury market is well supported. That was a signal to go long everything.
And then, just before we wrapped up, he dropped the number that's stuck in our head ever since.
2025, my end of year target is.
This is more than just an interview. It's how Arthur Hayes is positioning for what's next. And if you want to understand what's really going on in the markets and where Bitcoin is likely headed, then ladies and gentlemen, come join my conversation with Arthur. All right, Arthur, so the tariff ski cuts in real time, 3 weeks later, are they, would you say they're priced in right now or still?
I think that, people are living in Hopium. They think, oh, it's not going to be so bad. They're not really serious about sort of changing the global monetary and trade and capital structure. There's not really going to be a divorce between China and the US. And I think, that's Hopium. There will be a bifurcation of the world into a US camp and a Chinese camp. Countries will try to play both sides or align with one or the other. We don't know how that's all going to play out, but structurally this is going to happen. Trump is just accelerating a trend that was already present. He started a trade war in 2018.
Yeah.
Biden continued it. He has intensified it. He's backed up a bit, but if you've looked at how Trump does negotiations, he starts with a maximalist position. He walks it back. He looks more conciliatory. Then he comes back again at you with more maximum pressure to sort of get the best deal that he can given the set of facts. And so I think that's going to happen again. And so we're going to see some more volatility in the financial markets. But the best thing that we have figured out is that 140 on the move index elicits an immediate policy response. So you don't have to worry about it.
Say that again?
140 on the move bond volatility index elicits an immediate policy response.
Okay.
The day that move hit 140, went to 172 intraday, Jamie Dimon gets on CNBC and talks about how bad tariffs are and how the bond market is having issues. Trump immediately does the 90-day pause. And Besson gets on TV talking about treasury buybacks, and the Fed, Susan Collins, says they're ready to do whatever it takes. So the market, the American empire cannot handle volatility, nor can any other country around the world. Bitcoin thrives in that situation, so we don't need to be worried.
Yeah. So one of the things that we've seen is is China being pretty like all the other countries seem to kind of like really played into Trump's maximum pressure,
right.
Backing in. Okay, yeah, Trump, whatever you want, let's make a deal. Okay, rely 10% tariffs. China, on the other hand, seems to be like holding steady and even double downing. Although we know now that 45% of the containers have kind of stopped, and soon that's going to maybe be grind to a complete halt. So when it comes down to the trade war with China specifically and imports and exports, who depends on who more? And do you think China can continue to hold really firm and not kind of bend at the knee to Trump's demands, or what do you think's happening there?
So I think people underappreciate the amount of pain that the Chinese population can take to achieve a particular goal. And so Xi Jinping destroyed, what analysts will say 20 to 40% of GDP was directly or indirectly related to the property market. And he thought, there's in the Politburo, that China was too addicted to this type of growth, and therefore they were going to curtail it. And they popped the property market bubble starting in 2020, and it's been really bad for property developers. And they're not stopping. They're not rolling out the stimulus checks. They're not doing all the financial easing that the macro analysts say that they should do to arrest this decline in the property market. She is perfectly happy to watch that part of the economy wither and die if it means that the houses are more affordable for more people, and that credit that was going to building apartments goes to high tech, semiconductors, to AI, and all these sorts of things. So this was 30 to 40% of its economy. Of course, exports are big in China, but they're nowhere near as big as property. And so if they're willing to do that on property and they continue to be able to suffer the consequences of a property market bubble bursting, of course you can wait a few months and watch, the U.S. sort of experience this pain. Trump is a popularly elected politician. Everyone who's in his orbit is there to reap gains post-Trump leaving office in 2028. They can't sit by and watch the Republican Party get completely trounced in 2026, or, the country swing back to a Democrat president in 2028. All these people in Trump's orbit, they have, financial and political careers that extend well beyond that. And so they're very attuned to the pain that the American person is feeling, whether it's the rich person who owns stocks, or it's a small business owner who was importing Chinese goods, who can no longer do so, or it's somebody who is working at some sort of industry that no longer has a job because they can't make things work without Chinese intermediate goods. And so I don't think America can take the sort of pain that is necessary to do this change quickly. The change is going to happen. That might not happen in 6 months like Trump wants it to. It might take 20 years.
It's interesting too, because when Trump came into office, obviously one popular vote, won all the other votes. And my gut instinct would have said that with the elections in Canada coming up and Europe, that probably the right-leaning candidate would have won. But we just saw the elections happen, and the left party won. A lot of people are saying that came down to kind of the way that Trump was running things and how, the economy is kind of suffering and the uncertainty. Do you think that largely led to it? And then how do you think Trump and the administration will look at this as if things don't get much better coming into midterms?
I think that this, Carney winning in Canada, coming from behind, was more to do with Trump's 51st state, Canada, you do what we tell you to do, sort of solidarity, more so than anything else. And you see it in Europe, right? The Europeans, the elite Europeans were not on board with Trump trying to end the Ukraine war with Russia. And so now they rally behind, we are Europe. And so we need to do things for Europe, and fuck you, Trump, we're going to be more Europe. And so, this nationalistic pride for these nation state entities is rising in opposition to Trump, where they just think is an ugly American, right? So I don't think it has anything to do with, Trump's policies per se. It's just how he goes about enacting them.
That makes a lot of sense. You just literally just got off stage here at Token 2049. I didn't get to see the speech, but hopefully we can get some, what was the big takeaway from there, so we could sum up for the audience right now.
So essentially my main thesis is...
I heard it was great, by the way. We'll put a link in the description to it so you guys can watch a full one, and all of Arthur's socials and stuff like that too. But I just heard it was awesome.
So, in 2022, in the third quarter, everyone was super bearish on crypto and other risk assets. Why? Interest rates are rising. The bond market was collapsing. Stock market's going down. FTX is imploding. Nobody wanted to own crypto. Bitcoin hits 15,000. People think it's going to 10,000, that kind of stuff, right? And then out of the blue, Janet Yellen comes back with, not QE, this activist treasury issuance, issuing more bills and bonds, taking $2.5 trillion that are sterilized on the Fed's balance sheet and moving that into the global markets. And we saw risk assets from December of 2022 till early 2025 pump. Bitcoin up 6x, stocks doubled, gold doubles. Everything is great. But the Fed has not really been that accommodative over that period of time. He just stood by, Powell sat in his cuck chair and got fucked by Yellen, right? And that is the set we have today. It's a little bit different. So we have Besson in charge. We have another issue tariffs, right? Bond markets melting down, stocks cratering. Oh no, inflation is going to rise because China's not going to provide cheap goods. I'm very uncertain. I don't need to own Bitcoin. I don't need to own these other assets. But what happened? The authorities saw that volatility was increasing, and Besson gets on TV and talks about treasury buybacks.
Yeah.
Which is essentially a way for them to relieve pressure on balance sheet constraints, which allow the banks to lend more money to hedge funds to buy treasuries at auctions in this thing called a basis trade. And so I think that is going to be the bottom moment of this particular cycle when Besson got on Bloomberg and gave that interview saying he's got buybacks and he's going to make sure that the treasury market is well supported. That was a signal to go long everything.
Okay, so that was a big one, is the treasury buybacks that Besson said. Can you explain that just to the audience a little bit more simple, just why that's bullish and how that is?
Yeah, sure. So, these hedge funds, they own bonds. They have a trade where they buy a bond, they sell a derivative futures contract. And they take that bond to the bank and they say, hey, bank, I don't have any money to buy the bond. Can you give me the money? Mm-hmm. And they say, okay, yeah, sure. I'll look at the bond. It's a treasury bond, very liquid collateral. Here's some money. I want you to put a certain percentage of equity against that. Now, they need a lot of leverage to make this trade work from a profit standpoint. And so the less equity the bank requires, the more leverage they get, the more they do the trade.
Yeah.
And these hedge funds show up at the auctions and they say, I don't care what this bond is priced at because I'm just trying to trade this differential between a bond and a derivative. So yeah, the US balance sheet is fucked because it's $36 trillion and all these sort of issues, but hey, I'm going to make 10 basis points, lever it up 100 times. I'm sweet. I don't care what the price of the bond is.
This is kind of like the same basis trade that we saw when the ETFs first launched, and then when it.
Well, this is in the bond market. It has nothing to do with crypto.
Right. Okay. So, but also, you don't think they're going to go buy Bitcoin ETFs to this is that basis trade?
No, this is all about how many dollars. How do we get dollars into the system?
Right? Yeah.
So these hedge funds, they show up and they buy the treasury debt that Besson is issuing. Now the issue is that as a bond matures, it becomes less and less liquid as it moves further away from the benchmark tenor. So what can Besson do? Well, he can do a budget neutral, supply neutral thing where he issues a new bond. He buys back the old bond. So now the old bond trades a bit expensive.
Right.
The spread narrows between the old bond and the futures contract. The hedge fund makes a profit. Now their books are relieved of the old bonds that required a higher equity capital charge. They get these new bonds that they can get more leverage on. They made a profit, and now they can do this trade even more. Mm-hmm. And so Besson is essentially clearing the bank's balance sheet so they can lend more money to these hedge funds who can show up at the auction and buy the debt at a very expensive price and buy a lot of it. And in my presentation, I talked about how I know everyone's talking about Doge and Elon's going to cut the budget and all this kind of stuff, but looking at the numbers so far, fiscal year 2025 is tracking 22% higher than fiscal year 24 in the United States. Now, I know we're only 2 months into Trump's presidency. Maybe there's going to be.
Sorry, what do you mean tracking higher? What is tracking higher?
So the size of the deficit. So the deficit from the fiscal year in the U.S. starts in October.
We're having a bigger deficit this year.
Correct. We're going to have a bigger deficit this year.
Even with Doge.
Even with Doge. We're going to have less tax receipts because the stock market's down. And so that is the structural way that they just can't cut stuff fast enough.
Right.
And then if they do cut things and they have a recession and then all these automatic stabilizers come in and the government has to spend more money on unemployment checks and all these sorts of things. So there is only a one-way street for the deficit to expand. Besson needs to find someone to buy these bonds. He can do so by giving more leverage to relative value hedge funds by doing buybacks. And so that's the mechanism for how, a buyback in and of itself is not liquidity positive, leads to more dollars created through higher borrowing that is led by these relative value hedge funds who buy this stuff.
And so what else are there, because we're still in, we're easing off quantitative tightening right now, right? So we're not yet in quantitative easing, but what are some other kind of like non-QE tools that they have to kind of help the markets?
So there's the supplemental leverage ratio. I know people have been talking about that. And essentially that is, if I'm a bank and I buy a bond, these new regulations after the global financial crisis said, hey, you guys didn't hold enough capital against these bonds you bought. So we're going to make you hold more capital. That's responsible. And that means is I can only buy so much debt of the US government because it costs me precious equity capital to do so. So what the Fed did during COVID was when the bond market melted down, they said, hey, we're going to exempt you from that. You can buy as much treasury debt as possible with no equity down. So infinite leverage.
Wow.
And then after the fact, they reinstated that rule. So, Jamie Dimon's calling for it. Scott Besson's calling for it. The Fed has been talking about it in their meetings about, okay, to help the market function better, maybe we should exempt again treasuries from the supplemental leverage ratio so banks can go and buy them. So this is great for bank profitability because they go to the depositor and say, oh, I'm going to give you 1%, 2%, whatever it is.
Right.
I'm going to go buy this treasury debt at 4% with infinite leverage. I make 2% interest margin. Happy days.
Yeah.
I'm making lots of fucking money.
Yeah.
And so that is going to allow the commercial banks in the US to buy all the debt that Besson is issuing at whatever price Besson wants to issue it at.
Yeah.
And again, not QE.
Right.
It's a regulatory change, but that's how it impacts how the financial system functions.
So what do you think about the Fed and, the kind of drama that we had with Trump at first, calling Jerome too late Jerome, and that he was stupid, and then he kind of walked that back, like you said, and then talking about firing him and then not firing him. And then, of course, rate cuts is the goal. But, do you think that we're going to see rate cuts coming up in May or June?
I don't know. I don't think it matters. I think it's all about the treasury. And at the end of the day, what's Trump trying to do? He's trying to find out where is the line. Okay, well, I said I'm going to file Powell.
Yeah.
Bond market yields back up. Okay, not going to file Powell now.
Yeah.
Okay, I found there's a fault line there. I want to go maximalist tariffs and, equity market's down 20%, bond market volatility spikes. Okay, there's a line there. So he's finding out the constraints of what the market can handle in terms of how fast change can happen. And then he'll adjust and go forward.
So it's super interesting, right? I don't know if we've had. Can you think of the last time we've had a president that has done these kind of finding the like really coming out as a businessman and kind of feeling, where's my pressure point? Where is that?
Not really, but again, he's not doing anything different than a Democrat would have done. The policy will be the same. It's just the rhetoric and the speed. That's the issue. But that's why Bitcoin's great, because we don't care.
Yeah.
We know you're going to print more money. We know that Bitcoin does best when money is printed. I can't tell you what stock's going to do well. That's hard. No. But I can tell you Bitcoin's going to go.
Yeah. So in your speech, you said, I think Bitcoin to $1 million.
Correct.
2028.
Correct.
So what leads us to that?
So Biden issued about $7.1 trillion of debt, net to treasury issuance over his term, right? And we got Bitcoin 6x. Right? Trump was already tracking 22% higher in the first few months of his tenure.
And again, is that spending?
This is
higher
net,
deficit.
This is net treasury issuance.
Okay.
No, sorry, that's a deficit. The deficit is cumulatively $7.1 trillion deficit. The deficit's already expanding under Trump, and he's supposedly doing Doge. Mm-hmm. Yeah, they're cutting stuff. It's a drop in the bucket.
Not enough.
Right? And if you think about the US population is getting older structurally. So Social Security and Medicare payments will rise structurally. They can't stop that. The defense budget is going to only increase, right? They're going to have to reshore production, build a bunch more missiles and bullets and all that sort of stuff, right? And so again, the deficit's only going one way. It's going higher.
So what's the path to 1 million?
Yeah. So again, expanded deficit, 7.1 trillion cumulative deficit under Biden. Trump is only going to increase. U.S. population is getting older, so healthcare spending will increase. They can't change that. The defense budget will only go up because, we're talking about this global realignment of supply chains and trying to build it all in the United States and not use Chinese intermediate products. That's expensive, right? So it's going to cost more to buy American stuff. But again, that's not the point. It's like security and supply chain integrity and that kind of stuff. So the things that drive the budget are only going up, and interest on the treasury debt, again, is expanding exponentially because even if Trump is successful on his plan, which is 3% deficit by 2028, because of where you started with the size of the debt, your interest costs are still expanding exponentially.
Yeah.
So again, there's just no way mathematically, unless they decide we're going to shut down the government, which is not what he's talking about, that they're going to be able to spend less than Biden. Yeah. And so, we know what was going to happen. We know how Bitcoin responds to this. We now have an ETF. We now have this narrative in an institutional investor's mind. Oh, Bitcoin is not just NASDAQ high beta. It's actually a hedge against the fall of American exceptionalism, the fall of the American hegemonic empire. Maybe I should own some of this. This is going to do well, because I can't predict what happens with China and Trump and all the politics.
So, it sounds like, in a way, what you've said, and it was something I heard someone else kind of float this idea, they're going to need to spend more money. But also, what's a really good excuse is we want to make America great again, which means we need to bring all manufacturing back on shore. We need to build all of our nuclear warships that we haven't been building. All that's going to cost so much money. So, someone else floated the idea of the administration coming out and saying, we need some multi-trillion-dollar stimulus package essentially to rebuild America and do all that stuff, and subsidize manufacturing and get everyone to come back. Do you think that's kind of like maybe how it might be packaged and just another way of saying like we need massive stimulus to kind of...
Sure, and it'll be something like the CHIPS Act in the U.S. and the Green New Deal under Biden. At the end of the day, these politicians, they need to go back to their district and say, hey, here's some stuff, some goodies I brought you.
Yeah.
Whether it's a plant or it's some jobs and whatever. And so if Trump says, okay, guys, like, I know you guys are, deficit is bad, but hey, here's a bill and you can take it back and there's going to be a new Ford plant. There's going to be, a new chip foundry in your district. Are you going to say no to that?
No.
You want to get reelected. You're going to bring back the jobs to your constituency and the banks are going to lend. Oh, there's a government program that guarantees a buyer for this thing. Sure. Here's a loan, right?
Yeah.
So credit expands in the economy and people have jobs and they spend money. Yes, there's inflation, but if everyone's got a job and they have a good income, do they really care?
No.
Yeah. So I think that's the playbook in a sort of medium to longer term of how you get this expanded government spending and it being accepted by the population.
Do you think that we top out in 2025? And if you do, or where do you think that we top out and what price do you think we top out at this cycle?
I think, 2025, my end of year target is 250,000 for Bitcoin. I think that we're going to get the maximum sort of bullishness on the amount of money to be created probably in 2026, 2027, especially because in the US, the Fed chair role is up in May 26. And Trump, maybe they're not going to get a complete political lackey, but they're going to get somebody who is on board with printing the money and doing what they need to do to further accelerate this, make America great again. So I think that we're going to get a much more dovish Fed at the minimum, at the latest from May 2026. So we could see that 2026 to 2027 is absolute bananas. Well, everyone's just like, oh my God, they're just like, they're going to do everything. They do everything QE and supplemental leverage ratio and trivia buybacks and like yield curve control. It's all on because everybody's on side with Trump. And then we'll extrapolate a change and that's too large and then we correct.
Yeah. And that's the time that you guys want to be alive.
Yeah, exactly. Just wait for the Maelstrom parties in 2026.
Yeah. I got to get the VIP for that one. Yeah, for sure. So assuming that maybe that happens, right? Like that's the banana zone that Raul talks about, right? And so where do we go at that point? I mean, that's pre-2028, which you said like 1 million by then. Do you think maybe we hit it sooner, or is it kind of just like...
I think we'll hit the peak of the cycle in 2026, 2027. And then we're going to have to like think about, okay, we're expecting too much and then it might underdeliver. Yeah. Or, the Republicans are facing some election issues, right? Yeah. And things have to change. Or what happens with China? We don't know, right? There's so many other variables of how this could change, but I think the world is on this money printing track. And as that narrative becomes firmly entrenched, we're going to extrapolate a future that's really ridiculous.
Yeah.
And then we'll have to be brought back down to reality.
So when it comes down, your portfolio allocation right now, at least on your liquid asset sides, crypto sides, how much are you allocated to like Bitcoin versus other majors?
I mean, it's probably like 60% Bitcoin, 20% ETH, and the rest is other shitcoins. Okay,
so everybody right now, like, is talking shit about ETH, right? But I mean, for me, the way I think about it is just like, it's the only chain that feels like you could comfortably put a $500 billion, DeFi position on or something like that, and like not really worry about it going down or something like that. I don't know if Solana has been that battle tested and gone long enough without fault or anything like that. What do you think about ETH right now?
I think it's the most hated layer one, and so on balance, it should do better.
Yeah, exactly. Yeah.
It's most secure, proof of stake, largest number of developers, largest amount of value secured, all those sorts of things, right? Obviously, we were trading the rate of change and the expectation. That's why Solana went from 7 to 300, right? The rate of change of adoption of meme coins and transaction volume was really rapid. Therefore, the price went really, really high. But even at its peak at 300, it still didn't eclipse ETH in terms of total market cap, right? But again, we're not trading total market cap, we're trading the price.
Yeah.
So I think that Solana, yes, will it go up? Absolutely. Could ETH outperform Solana if we get this sort of money printing bonanza and people shift out of Bitcoin into more altcoins? Yes, and especially if ETH starts to show some life, the price creates the narrative.
Yes,
then all these things that we love,
ETH is great again.
Yeah, exactly. Oh, it's got the most developers. That's why I'm buying ETH.
Yeah.
All these things.
Oh, you think anyone's going to build a real DeFi protocol in Solana? Like, no way. Yeah. So it's just meme coins are popular, so Solana's popular. And what about any other Anything else that you think is like really going to be strong? I mean, like you had Sergey in the digital asset kind of committee, like one of the only tokens. You had, I think, out of all everyone who's chosen to be in that inner circle, that first one that happened in the White House, you had Sergey with Chainlink, you had Brad Garlinghouse with XRP, but that was it. Everyone else was like Brian, no token, no, like the other guys, no token. Was there any other kind of assets you think are?
I mean, so we own Pendle, and we're investor and advisor of EtherFi. So I think there will be a narrative fundamental season, which is, do you have users? Do the users pay real money for a product or service? And if you do you take that revenue and profit and pass it back from the protocol to the token holders? Yes. Very few projects do all those things.
Yes, for sure.
Right? And so I think after doing 10 years of altcoin trading, maybe we finally like done so many of the bullshit that finally we're okay, well, I want to see some fucking money in my pocket, staking, buybacks, whatever it is, right? Yep. I'm tired of this like VC game that we've been playing, or these shitty ICOs that I've been buying. I want to see a project that actually has real traction.
Yeah.
Especially if it's already launched, right? If it's not launched, fine, cool. If there's a new narrative, I don't know what that's going to be, a new shiny thing, we'll trade it.
Yeah.
It'll be fugazi, whatever. It'll be fun. If I'm talking about a token already listed, am I going to buy the like down only, high FTV, low float token on Binance? No, I'm going to go, I want the hyper liquids, right?
Yeah.
So we're super bullish on Pendle, largest fixed income trading platform. It's profitable. It's handing back rewards to Pendle holders. We're very bullish on EtherFi. They're building this neobank. I was on Twitter shilling my EtherFi card. I've been around for a long time. I've seen a lot of these cards. The fees are reasonable. It works. You can use your Apple Pay. I think they're going to build a very sticky client base spending good money. It's like the American Express of crypto.
Cool.
Right? And they're committed to taking revenue and buying back their token and passing it on to ETH5 stakers. So again, that's the type of stuff that we're very interested in if it's a token that's already launched.
Okay. And for people who are watching, that maybe are new to crypto, or even veterans, because like everyone wants to know, like maybe what is your advice for people on if they're either starting out and looking to allocate capital, or they want to maybe rebalance, or maybe what kind of strategies would you suggest to people who are kind of just getting in the space?
Well, I think you always have to define your hurdle rate. So what are you benchmarking against? So in Maelstrom, I benchmarked Akshat and the rest of the guys against Bitcoin. I could go buy Bitcoin and not pay all of your salaries. Yeah. So justify to me with your performance why you should have a job, right? And so that's our hurdle rate, is invest in shit coins and early stage projects and do all this advisory stuff to earn a better return than if I just bought Bitcoin or ETH, right? But it might be different for another person. Oh, I borrow this money, it cost me 5%, right? Okay, so I need to make more than 5% of my dollars. Okay. Yeah. How do I go about doing that? Or I have a long time horizon and I've seen that Bitcoin's done really, really well. I believe in this money printing thing, so I'm going to buy some Bitcoin, hold it for 10 years, and I think I should be outperforming the fiat debasement. So again, really depends on like your life situation, what's your goal, define it before you invest. So then you can always check yourself, okay, well, I've got this investment. Is it actually doing the thing I want it to do? Yeah. If not, then you adjust. But you don't want to define that strategy and justify a bad position. Yeah. Oh, I was doing it for that. That's why I'm going to keep holding this. No, maybe not. Yeah,
I mean, you and I both, I think we play around in the casino sometimes, buy some shit coins, and like it's fun. It's like a dopamine hit when they pump 50x or something like that, But do you think that people watching should... Like, what do you think if they want to play around in that casino, how much percent of their portfolio would they be allocating to these high risk, high reward types of beta plays?
I think if you are concerned about the price when you go to sleep at night, then you have too large of a position.
Yeah, 100%. I've been there myself, especially in leverage and borrowing and on Aave all the time to borrow. And I've been there everywhere. Like Bitcoin comes down a bit, and you're like, fuck, you can't sleep. Yeah. That's not a good place to be. So Bitcoin goes back to, I don't know, let's call it all-time highs.
Yeah.
So what kind of defines your checklist on when we see altcoin season coming?
Real quick, guys, I just want to tell you about my Bitcoin accumulation bot. It has been absolutely crushing it. And in just 45 days, guys, I've turned 1 Bitcoin into 1.033 Bitcoin. If this pace continues, guys, I will have turned 1 Bitcoin into 1.27 or 1.28 Bitcoin. Now, just to give you an example of how powerful compounding gains can be, if you keep this strategy going and you don't take any profits out, if you start with 0.1 Bitcoin, after 10 years, it turns into 1.16 Bitcoin. If Bitcoin goes to $1 million after 10 years, then you're talking about turning $9,500 today for 0.1 Bitcoin into over $1 million. If you want to find out more and you haven't seen my video interviewing Ash from Sequence, there's a link in the description below. I made a whole video on exactly how this strategy works. And I'll also leave a tile at the end of the video. You can just click that once you're done watching this one. It's one of the most powerful strategies and one of the best ways to secure your financial future. All right, now back into the interview.
I personally think Bitcoin dominance is going back to where it was before sort of the 2021 altcoin season, which is like 70%.
Yeah.
That sort of area. And then, people start rotating, right? Oh, it's back above all-time highs. Oh, the bull market's back. Okay, well, altcoins should outperform. See if that, the shit is a key word there.
Yeah.
Depends on what you buy.
Yeah.
And that'll give back the animal spirits for people to start going back in the ecosystem.
Yeah.
Like, okay, the bull market is confirmed. We went down, we're from 70 to 110, down to 70, back above 110, maybe we're at 150 or 200 or some level, like on rising volume, very good looking technical chart. Okay, now it's time to go into the shitter and try to find some gems.
Do you think that there's a scenario, because I wonder about this sometimes. I've been here for all the cycles before. They all play out almost identically. But in my mind, there seems to be this one scenario where, the strategic reserve starts aggressively accumulating, and then the other countries are like, oh, this is really happening. And then they start aggressively accumulating, and then the Bitcoin supply shock really kicks in, and now Bitcoin's going up $10,000, $20,000 a day, and it's just sucking liquidity from, because when that thing starts skyrocketing, when we see one coin that just, we get them once every 2 months or something like that, right? Some Trump coin comes out and just every alts go down 80% because everyone's rotating into that, sucking all the capital. Do you think there's a scenario where Bitcoin goes on this crazy adoption cycle and supply shock kicks in and dominance just keeps going up and people now are like, all coins are worthless. They're shitty meme coin stocks. Let's go into Bitcoin because that's what everyone's adopting. And so we go into, I think eventually, probably at some point, people will start rotating back into alts. But do you think there's a period of time where people start questioning, like Bitcoin really takes off and altcoins don't for a while?
We've kind of had that already.
Yeah.
I'm not really into the whole strategic reserve situation because the countries that people really talk about, the United States, right? Okay, they're a deficit country. So the only way they're able to do strategic reserve is, okay, well, we're not going to sell the Bitcoin we took from people. Okay, fine, that's 200,000 Bitcoin. But I just don't see how a politician who's popularly elected goes and says, I'm going to print some money to buy Bitcoin. Especially when the popular narrative is a bunch of Bitcoin bros going to the club buying bottles. Is that really what you want people to think about your policy? I just don't see that happening. I see people doing the China play, which is, okay, I've got excess electricity that's stranded. I'm going to mine some Bitcoin and I'll hold it on the state's coffers, but I'm not buying it in the market. Or in the UAE, right? I've got excess hydrocarbons. Fine, I'm going to save those hydrocarbons. I'm not going to pump the oil. I'll generate electricity, create some Bitcoin. I'm not going to print money and buy Bitcoin. I might print money and hand out a check to everybody because at least I get more voters that way.
Yeah.
Right? I just don't see strategic reserve happening in the way in which people fantasize about it. And so therefore this situation where America's printing trillions of dollars to buy Bitcoin. Why? What's the point? It doesn't buy you any votes, right? Okay, cool. You made the rich people who are going to vote for you anyways richer. That's not a valuable strategy to, counter sort of a resurgence of the other party in the next election.
Yeah, I agree. I think we talked about this a little bit last time too, but now we start to see even more corporates doing the kind of MicroStrategy method. Do you think there's going to be, so maybe not the Bitcoin reserve strategy, but I think what we've seen now, actually I know what we've seen now, I talked about it yesterday's show, is we've seen corporations acquiring more Bitcoin than the ETFs themselves. So do you think that maybe this might continue? And so there's a lot of different forces other than just the Bitcoin strategic reserve that could drive this supply shock, especially and then also who is it? Is it Howard Lutnick's son? I think starting this
21 or whatever.
Yes, that one. Yeah. So we have a lot of these kind of things that are being buy up a bunch of Bitcoin.
Yeah, we participated in the UPXI deal where that company is going to put someone on its balance sheet. I think at the end of the day, there's a portion of the world that cannot even invest in a Bitcoin ETF that wants some sort of crypto exposure.
Yeah.
Right. The rules say they can't do it. But they can invest in public market equities, especially the United States. This is the people that Saylor is targeting. Hey, due to some rules that I didn't create, you can't buy what you want to buy.
Yeah.
So I'm going to give you a proxy for that, and I'm going to load up my balance sheet with Bitcoin or ETH or Solana, whatever it is, and then you're going to pump my stock, and it's going to trade at a premium to what net asset value. That's the trade. And so yes, they'll continue as long as there's a lot of this money on the sideline that says I want to own crypto. I'm not allowed to buy the Bitcoin ETF. I'm not allowed to buy Bitcoin spot or I won't want to. And therefore the only option are these like corporate stocks that I'm already approved to buy. And so then they do this like treasury strategy. So I think it will continue for a while. I think obviously Saylor is in the best position because he's now on the S&P 500 or NASDAQ, whatever the index is, and has this ability to just tap the ATM and continue.
Crazy.
And then the music may stop when volatility declines on Bitcoin, and these stocks are no longer rising and falling at a big degree, and then the interest wanes.
Yeah. We've seen Bitcoin kind of tracking gold and kind of decoupling from the stock market. We've seen traditionally always super high correlation between Bitcoin and the stock market. Yeah. You think that we're finally decoupled, or you think it's just a short-term kind of decoupling?
I think half decoupled. I still think there's going to be another big sell-off when Trump goes back to saying, oh, we're really going hard at China, or something like that, right? To really reestablish his credentials as like maximalist position on tariffs. Oh shit, they're not going to provide the money that we want. Stock market goes down. Bitcoin might wobble a bit, but I think people are starting to finally understand it's about bond market volatility. They always act and always print the money when the bond market volatility rises, and therefore Bitcoin should do well. So I think we need one more demonstration of that to really just sink into people's minds. So yeah, do I think it's going to be another like early April situation where Bitcoin and NASDAQ are tracking pretty much exactly? No, I think Bitcoin is going to perform. It might not go up, but it will be steady if sort of stock market creates a bit.
Which has been kind of unheard of for its whole history almost.
Yeah.
I mean, we've seen it being treated as a tech stock.
Yeah.
Right? Yeah. Well, good.
All right. Well,
Arthur, thanks, man. Very, very good.
Yeah.